Hey guys, welcome back to the channel. Today we're talking about another stock we just bought. Wanted to give you a heads up, and that is McDonald's.
I know. You guys know that we travel all over the world, so we do see McDonald's pretty much every single country we've been in. We've seen McDonald's, and of course all over the US. McDonald's is pretty expensive, but on Monday we bought some at $248. Now, you know, as I mentioned, McDonald's stock is pretty much always expensive, but at $248 it was cheap enough for us to buy into a quarter of a position.
Yeah, so we had a little bit, we got a little bit more. McDonald's stock has been quite expensive all year, quite overvalued, and we've been looking to get into the stock for many number of years, and we keep looking at it, and this felt like the perfect time to kind of dive in. Now, we did not, as we mentioned, get a full position of McDonald's. We're only at a quarter position right now, and I think if it were to drop down to about $235, that's what we would deem as the fair value for it, and we would pretty much get a full position then. But it is likely not to get there, or we hope it gets there, but it may not get there. And if it doesn't, we wanted to get a quarter position because this is a stock that we see as a long-term hold for us. It always trades at a premium, so we are willing to pay a small premium. Our previous stock purchase of McDonald's was at $235. That was our average cost, so we did raise that just slightly. But again, we think it's worth it, and long term will be worth it.
Yeah, you really want to take a look at, the numbers, and you do have to make little adjustments like that from time to time on what you're willing to buy a stock or, a position.
Let's talk about the dividend that we're going to get and that you could get buying this stock. So dividend 2.66%.
And they just raised it, the dividend 10%.
Yeah, which is great. In this market, you do not see a lot of companies raising the dividend by 10%. It does have a 5-year average dividend raise of 7.1%, so that's also pretty healthy. So if you're a long-term income investor, you need your money right now out of your stock, you need your dividends, maybe not the best investment for you because it's not going to get you that 5 or 6%. But this is the type of stock that if you're getting it now at a 2.6% dividend and they're raising it 8 to 10% every year, 10 to 15 years down the road, the stock is going to go up and the dividend is going to be where you need it. So for us, we're 50 and we're looking to have this stock for a long time. We're looking to have that dividend go up and just have some appreciation of the stock as well. So we think it's a winner for us.
Yeah.
We do want to mention we are going to be going live. Tell them when we're going to be going live.
We're going live this Saturday. What day is it? October, let's see, this Saturday, today is the 11th, so 12, 13, 14th, 15th?
Yeah.
15th, October 15th at 11:30 a.m. So we're starting...
14th.
The 14th, sorry. So it's the 14th of October. We are starting at 11 a.m. over on our Grounded Life Travel channel, which is our regular travel channel. But if you want to join in, on that, you can. We'll be talking travel stuff over there. But then at 11:30, we're going to switch over here and do a live with you guys and answer your questions. And one of the big ones that we're going to hop in on too is if you guys have questions about particular stocks, we can chat about those too.
Yeah, so leave a comment on this video if you have a stock that you're not sure you're going to make it to the live. We'll bring it up on the live, or just jump in and get us on the live stream. Wanted to mention, I know a lot of people that look at McDonald's, they think, oh, it's so expensive, it's overvalued, and it is a premium stock. There's no doubt about that. But what I want to point out is with this, if you look at the chart of McDonald's, it has definitely gone down these last few months, and it has only been this cheap on a price to earnings ratio 2 times in the last 7 years, and that would be in 2017 and in 2020. We all know what happened then. That's unlikely to happen again soon. So even though it's slightly overvalued right now on a long-term basis, it is really quite cheap based on the last history of the last 7 years. That's why we're jumping in, because this is an iconic company.
Right, it is. It's an iconic company. It's a brand that's known around the world, and it has long-term hold. So, I mean, it's really one that you don't want to look beyond and look past, or, you know, poo-poo.
Yeah.
Because it really is one that is going to enhance your portfolio at the end of the day.
Yeah, we truly believe this is a winning stock. If you hold this for the next 5 to 10 years, I don't see how you can go wrong with it. If you want to know if it's a buy, hold, or sell, for us it's a definite buy right now. We just bought a quarter position. If you already own it and you're at this video because you're worried that it's going down, hold on. Don't sell it now.
Hang on to it.
You would be selling at the bottom if you sell now, and you don't want to do that. This stock has so much brand power that I don't see how this can go wrong. Analysts are expecting this stock to grow 8 to 9% over the next few years, and with that alone, it's gonna be coming back up in the next few years. So, not a stock you really want to trade, and we don't really ever talk to people about trading, like trying to time this stock. This is just a stock you buy. Pick your entry point, hold on to it for 5 to 10 years, and you'll be happy at the end of that time frame.
So hopefully this was helpful to you guys. Don't forget to tune in for the live with us on Saturday, and we'll see you guys next time.